Welcome to the Dreamit Dose. When startups feel they don't have enough traction or proof points, they'll often revert to raising a bridge. Hearing the term bridge round usually has a negative connotation in investors' minds, especially when startups don't position it correctly and hit key points that investors really want to hear. Raising a bridge is really not hard if you know what you're doing. Let's dive in. When you say we're raising a bridge, as an investor, the first thing I think is, oh shit, they're probably in trouble. Here's how you change that perception. First, let's talk about why you're raising a bridge. Usually there's three core reasons, and it's important to know which one you fit into. The first and most common scenario is you didn't achieve the traction needed to raise your next round, and you're running out of cash. The next reason is you might want to take on a bit more cash to hit key goals that are going to increase your valuation so your next round is less dilutive. Lastly, perhaps market conditions have changed. For example, new competitors have emerged, or the market's heating up more rapidly than expected. Let's go deeper into reason one. Low traction, low cash. The most common situation startups find themselves in when raising a bridge round. You need to be super careful about negative signaling in this situation. Why is this negative? Because investors will assume that most likely you weren't able to hit your goals and you may be failing. So you'll need to convince them that this time your plan is going to work. Realize you're starting from a disadvantage and your story is going to need to be incredibly compelling. If you're in reason two, you've decided that you need a bit more cash to build out the company, product, traction, or other proof points. By doing a bridge for this reason, you can raise your next round at a better, less dilutive valuation before bringing in your next large round of capital. But be careful here. Investors may try to pick this apart to really see if you're in reason one, low traction, low cash. So you'll need to explain how your valuation is going to step up in a big way, and this couldn't be foreseen. The last reason is changing market conditions. Perhaps there's some new competitor that's emerged, the market's heating up, or there's some other fast-moving dynamic that's changed your funding needs. That's fine as long as you can tell a credible story. Once again, investors may call BS and just think you're trying to reposition your bridge round into a more favorable light. Whichever core reason you fit into, make sure from the start you're clear on why you're choosing to do a bridge round. Now, let's make sure you avoid building a bridge to nowhere, because when you say you're raising a bridge, I think a bridge to where? As an investor, I want to make sure you're building a bridge that's going to get you to where you need to go, not that you're building a pier that you're going to walk off the end of. So you need to have a great story on how this bridge is going to get you to your goals, fundable milestones, or cash flow break even. So in your pitch, you need to make sure to cover the goals you'll hit with this bridge, why you feel these goals are fundable milestones that create significant value inflection points for a larger round, evidence that you've picked the right fundable milestones, and make sure you bake in enough cash and time to close your next round once you've hit your key milestones. Typically, this is at least 3 additional months. Next, we need to talk about structuring a bridge round. Most of the time, it's done as a convertible note, so investors really don't know the valuation until the next price round. So you're asking investors to put money in, not really knowing what it's worth. To help them get over their concerns, you'll usually offer a discount to the next round, typically 20%. Another way to get them over the hump is to put a valuation cap on the bridge. That way the next round's valuation doesn't run away from them. Realize investing in a bridge is really high risk, and the investor is thinking, is it really worth a 20% discount where I might lose all of my money, or should I just wait and invest in the next round and not get the discount? And you better make sure to be ready to answer this one. Are previous investors going to be putting money into the bridge? For the most part, insiders doubling down shows they still believe in you. If they're not coming into the round, that's going to be some serious negative signaling you're going to need to overcome. Make sure you have clear and convincing answers if any previous investors are not coming in. For example, I have 2 angels that were in my last round and they're both tapped out. Or my seed round was just 1 fund and they're out of dry powder and can't continue to invest. Lastly, one of the most critical things an investor is going to look for is your momentum. So what momentum do you have in your sales velocity, revenue, LTV to CAC ratio, cost of customer acquisition, rate of trials, close ratio, things along these lines that show that you're moving in the right direction. Investors like to invest in lines, not points. So they don't want to just hear about a point in time like your current revenue, but they want to understand how things are changing and what momentum is going on inside your model and how your company is growing. That's it. That's how you raise a bridge round. Be clear on why you're raising the bridge. Be careful about negative signaling. Make sure you're building a bridge, not a pier. Hit your fundable milestones. Structure your bridge with the right discount and cap. Make sure to stand in an investor's shoes and understand, is the discount really worth the risk? Do you have insider support? If not, why not? And remember, momentum is everything. That's your Dreamit Dose in way over 5 minutes. Please leave your questions in the comments section. Also, please like and subscribe. We have a lot more coming. And check out Dreamit Live with interesting guests and live Q&A. Thanks for watching. See you next time. That's it. That's how you raise a bridge round. Blah. You're really going to need to spend time and figure out how to blah, 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 blah. You're going to need to be able to figure out something smart to say, which I'm not doing right now. That way the valuation doesn't run away with them for the next round. If they're not, now I can't remember a thing.